It's unbelievably weak, I would say. I would call it the weakest right now. After reading that piece of garbage they sent us, I didn't even finish reading it. They said, I'm not going to waste my time reading it. I would say it's one of the weakest right now. It's on life support. They understand these are all medical people. And Dr. Oz, life support is not a good thing. Do you agree?
Bad prognostic.
I would say the ceasefire is on massive life support, where the doctor walks in and says, sir, your loved one has approximately a 1% chance of living.
You just heard that President Trump saying that the ceasefire between the U.S. and Iran is on massive life support after earlier rejecting Tehran's latest peace offer. But with Iran remaining defiant, the global economy is bracing for more pain. Live from Tokyo, I'm Sherian. This is Insight, where we dive deeper into the stories that matter with crucial context and analysis. China investors are bracing for the high-stakes summit between Xi Jinping and Donald Trump. Markets are searching for diplomatic middle ground to protect the trade détente and the yuan. Japan's finance minister is signaling a coordinated path with Scott Bessent on the yen. Katayama says she's working closely with the U.S. Treasury Secretary following their Tokyo meeting. South Korea's Kospi is reeling after $300 billion in value vanished in just 97 minutes. The flash sell-off was triggered by a proposal for an AI-funded citizens' dividend, souring sentiment across Asia. Daiichi Sankyo is navigating a significant profit shortfall after its annual forecast missed the mark. CEO Hiroyuki Okuzawa joins us to discuss that and the company's oncology strategy. And Prime Minister Modi's appeal to curb gold purchases is putting pressure on India's leading jewelry retailer. Titan's CFO Ashok Sonthalia joins us on the risks ahead after reporting a 35% jump in quarterly profit. Our top story today, the ceasefire between the U.S. and Iran is facing a precarious moment, with President Trump saying the deal is on life support. The remarks and Trump's rejection of Tehran's latest offer sent energy prices higher, with a prolonged closure of the waterway signaling to investors they might stay elevated for longer. Still, the U.S. president maintains that reaching a diplomatic solution is still possible. Bloomberg Horizon's Middle East and Africa anchor Jumana Borsechi joins us now from Dubai. Jumana, is this just wishful thinking at this point when the president has also called Iran's proposal, quote, a piece of garbage?
He certainly did say that, and multiple narratives emerged from President Trump yesterday throughout the course of that press conference. And of course, the one that's getting the most attention is the fact that he did say that the ceasefire is sitting on life support now with a less than 1% chance of survival. He obviously meant that in jest. But at the same time, he also went on to say that Iran's counter-proposal was a, quote, piece of garbage. And of course, we know yesterday that he put up that Truth Social post suggesting that what they had come back with was totally unacceptable. But then in the same breath, he also indicated that Iran had indicated a willingness to pass over that so-called nuclear dust. And I should say that we have not had an official commentary from Iran yet suggesting that they're willing to hand over the highly enriched uranium material, which is, of course, one of the key sticking points here. At the same time, President Trump was asked whether a diplomatic solution is still feasible, and he still said yes. So there perhaps is still a little bit of hope that maybe over the coming days, the coming weeks, some of the differences in their respective stances can actually be breached, and we can look at some form of a compromise. At the same time, and again, there's a lot going on here, there are many more hawkish members of his advisors, his administration, including the likes of Senator Lindsey Graham, who are saying that the U.S. perhaps should use this opportunity to restart Project Freedom to force forcefully reopen the strait. And of course, that is one of the main reasons why the Iranian side pushed back so hard last week, saying that the U.S. cannot forcefully open the naval blockade in the absence of agreeing to the other terms. So still a lot of divergence when it comes to the approach. The main thing we're watching out for, though, Sherry, of course, is that high-level summit that's taking place between Trump and Xi this week. And it is unlikely during the course of that summit, or even before, that the U.S. go down the military route. Perhaps China will play a diplomatic role in brokering a deal.
Yeah, that's pretty interesting, right? Perhaps nothing to escalate at this point as we head towards that summit. We have heard that, of course, Iran will be discussed with Beijing. At this point, though, there are so many other players when it comes to this conflict, right? What's been the response so far, especially when it comes to what we understand the proposal to be here from both sides?
Yeah, so, that's exactly it. I mean, you've had a big push for diplomacy in the last couple of weeks, and that has been led by the main mediator, Pakistan, of course, and the messages have been relayed between the U.S. and Iran via the main mediator, that is Pakistan, but then also other countries in the region have been playing an active role too, even the ones that were susceptible to some of those attacks. You've had Saudi Arabia, who also President Trump actually credited with asking them to put a pause on Project Freedom, increasingly looking to leverage some of their diplomatic clout as well. Even Qatar, and we know that the Qatari Prime Minister was in the U.S. over the course of the weekend. He met with J.D. Vance, he met with Rubio in his capacity as foreign minister. So the push certainly is there from the region to help bring down the temperature. I think the bar for a renewed round of broader regional conflict is still quite high. At the same time, we're still in a state of stalemate, and many people say that things cannot continue this way. We are in a state of impasse. Something has to break. Either we go back to hostilities, or there is some form of a breakthrough diplomatically, and the key is how we get the two sides to compromise.
Horizon's Middle East and Africa anchor Jumana Borsachi, always good to get your updates. And as we have been discussing, the conflict in Iran also likely to overshadow upcoming talks between President Trump and Chinese leader Xi Jinping this week. Trump saying that he will discuss U.S. arms sales to Taiwan with Xi, a move that could ruffle some feathers in Washington.
Do you think we should still be selling them weapons? The United States should
Well, I'm going to have that discussion with President Xi. President Xi would like us not to, and I'll have that discussion.
For more, let's bring in our Asia economics and government senior correspondent, Rebecca Chun-Wilkins. Rebecca, plenty of high-stakes issue on the table right now.
Yeah, that's right, absolutely. And as you were just discussing with Jumana, the Iran war very much casting a long shadow over these talks, and in fact was one of the reasons that Beijing was somewhat uneasy over the timing of these talks. They were hoping to have them after there has been some kind of resolution. There have been calls mounting, both sort of quietly and some louder, potentially even from Trump himself, for Beijing to play a bigger role when it comes to ending that conflict in Iran. Now, Beijing typically doesn't like to sort of operate in this manner. We have seen it taking a bigger stake, for example, negotiating that détente a couple of years ago, but it tends to sort of like to have all of the chips in place before then becoming more public with what is successfully been able to achieve. So the unpredictable nature of both what Trump will demand and also what Trump will do is, I think, making some in Beijing rather uneasy.
What are we expecting to be the next leg of conversations? Because every time we have these very high-profile conversations, we do want to see something more concrete out of it. Will we get those business deals? Will we get that relief on tariffs that both sides are seeking?
Well, we are seeing a pretty hefty sized delegation coming through for confirmation from the White House, now suggesting there'll be more than a dozen senior business leaders. Now, some very familiar names that we would have expected to see, Citigroup, for example, Schwartzman will be there. But there are a couple of threads that are worth pulling out. One, of course, is the Boeing CEO who will be there, Kelly Ortberg. Now, that comes as there is this potential deal that Boeing is pushing for to buy potential 500 aircraft sets sale to the Chinese of their 737 MAX. So certainly one thing to watch there. The other thing is someone who isn't there, which is Jensen Huang. We were sort of questions over whether NVIDIA would be represented in that delegation. Does seem like that is not going to be the case. Potentially a blow there to his bid to open up their export channel of chips into China, which is another sort of interesting element that I think worth watching. When we think about what actually comes through, I mean, I think there are much more modest expectations. If we think back to 2017, $250 billion of deals that were announced back at that time. I think the optics and the actual sort of expectations this time round are going to be much more modest, but still Trump and the other leaders walking away will want to appear to have produced something positive.
Our Asia Economics and Government Senior Correspondent Rebecca Chung-Wilkins there with what to expect from the very anticipated Xi-Trump summit. Let's now get insights on how markets are reacting to all of this heightened geopolitical risk. Jun Bei Liu joins us. She's the co-founder and lead portfolio manager at 10Cap. Jun Bei, really good to have you back. I mean, I talk about these geopolitical risks, but how much do they actually matter to market moves when we have this enormous global AI memory cycle that's leading to sort of unstoppable rallies all over the world?
Look, absolutely. As we talk about geopolitical uncertainty, as we have seen in the last few years, it can drive market in a big way. We are now seeing a bit of risk off in the market, investors taking some capital off the table, leading into this get-together on Thursday, as well as the flare-up seems to be on the war front. Look, I think it's the AI thematic will continue, but what investors really at the moment really worried about is everywhere else. You look at the cyclical sector that's under pressure. You look at the, pretty much everywhere else in the economy is now sort of slowing down because of the what is happening on the war front, high oil prices. And then if we do have a flare up in terms of the trade negotiation, then it does create a bit of indigestion for the equity markets.
Especially when you're looking a little bit stretched with the incredible AI rally that I mentioned. Where are some of the pressure points across Asia?
Yeah, look, I think across Asia, I think it's at the moment really about what is happening with the oil front. The longer this Iran the uncertainty drags on, the more the real economic impact there will be. And at the same time, when we talk about the AI, the view of AI is even though some parts of it might be stretched, but there is still a lot of investment into that whole supply chain. So I think for investors, that's the only, perhaps the only place, aside from some of the commodity space, that does have some earnings certainty because of the huge wave of investment going into those space. So look, I think, the Asian market is still reasonably positioned, but it really depends on how long this war is going to drag out. I think, we're already seeing the companies coming out with different earnings downgrading, earnings expectations, particularly the cyclical businesses. But I think if it drags on for another month or another month and a bit, we certainly will experience more pressure and more downgrades to come through.
Especially as you continue to see the divergence and the bifurcation, not only in economies, but also in markets, right? The Sensex in India, for example, underperforming while you have these tech-exposed markets rallying like Taiwan, and a little bit of downside for the Korean Kospi, but still after 80% gains this year. Is this
Absolutely
a phenomenon that we'll continue to see throughout the rest of the year or even longer play out?
Yeah, look, I think it certainly seems it will continue into the rest of the year. Will it hold longer? It's probably unlikely because we are now seeing this market become incredibly narrow. It is moving to very few or very narrow sectors that is going higher. Now, it is supported by earnings because supported by increased investment and the like, cost efficiency. But we do think, the thematic is still pretty strong in that space. But be mindful, in portfolio sense, the rest of the market, you really need to manage some of the risk that is now appearing, particularly as mentioned before, some of those cyclical areas.
Jun Bei Liu of 10cap, you're sticking around. We do want to talk about Japan next. The finance minister here actually saying that her team is coordinating with U.S. Treasury Secretary Scott Bessent on FX. So the details are coming up next. This is Bloomberg.
Japan and United States alliance is by far the best for the time being, and I will try to continue it a long time.
Japan's Finance Minister Satsuki Katayama holding a bilateral meeting with Treasury Secretary Scott Bessent just hours ago. Katayama also confirming that her team is coordinating closely with Bessent on currency policy. It comes after Japan's recent suspected market intervention. For more, let's bring Bloomberg senior editor Brian Fowler. I mean, we were so anticipating this trip just in case something might come out that might move the yen at a time when we continue to suspect several bouts of intervention. Anything yet?
Yeah, well, he's still on the ground, so we have a few hours to go. We may get something, but so far it's been fairly tame. We had Katayama, Finance Minister Katayama this morning come out and after meeting with him, she kind of talked about their meeting. She started by saying that she wasn't going to pass on any direct comments that Bessent had made. On the other hand, she did emphasize that they had talked about coordinating on FX and that they had agreed that they were working well together closely on FX. And that seemed to sort of imply maybe she had won some kind of tacit approval from Bessent during their meeting. We know that they're on the same page really in terms of their goal. Bessent he took the unusual step in January of giving the green light to the New York Fed to conduct rate checks, which supported the yen. And we know that the BOJ has been intervening on behalf of MOF in the last few weeks.
And when we recently also spoke to Finance Minister Katayama, she kept insisting to me and to the broader Japanese audience here in Tokyo that they're in constant communication 24/7, right? But also she kept emphasizing perhaps her closeness and affinity for Secretary Bessent, a character who's very well known here in Japan. How many trips has he done personally, according to his own account, 50 plus or something?
54. This is his 54th one. And yes, he knows Japan very, very well. And I think that complicates things for the Japanese side because they can't really be vague on certain points. He knows what's going on, so he can kind of call them on certain issues if he thinks that they're not being forthright.
Like some space for the central bank?
Yes, so that is a key thing. He's going to meet with Takaichi later today. We know that Prime Minister Takaichi, before she became Prime Minister, clearly was opposed to rate hikes. She had said, it would be stupid to raise interest rates when the economy's not going really gangbusters. And she's toned down her comments a little bit since becoming Prime Minister, but she still thought to favor monetary easing. So it'll be interesting to see what, if anything, he says to her. Katayama, when she came out this morning, out of the blue, she just said, oh, by the way, BOJ policy, the particulars should be left to the BOJ, which might imply that he had kind of reminded her of that during their meeting.
Oh, that's interesting. That's an interesting take. But just quickly, he came to Japan ahead of going to China.
Yeah.
There's a pretty strong signaling there.
Yeah, so I think he wants to send a signal that Japan and the U.S. are aligned on a whole spate of issues, including supply chain security, critical minerals, and that's going to be something he carries with him to Beijing when he attends that bilateral summit.
Brian Fowler, Bloomberg senior editor here with the latest on Secretary Bessent's visit to Japan and, of course, tons of implications for the Japanese yen and the markets as discussed. Again, Jun Bei Liu is back, co-founder and lead portfolio manager at 10cap. Jun Bei, how do you take this visit and how closely are you watching for any reaction in the yen?
Yeah, look, I think this visit is very important, and it also shows how strong the relationship is, and also to investors, it shows why Japan is doing so well as that part of whole closer relationship, as well as the beneficiary of the AI investment. Look, anything can come through with it. Look, we're not really expecting much. Ultimately, Japan is just doing really well. Look, of course, the oil is a big deal for them. We need need to, the base case is that we need to see some resolution there. But the country is doing really well. And a closer relationship with the US is a very good sign for that continued strength in terms of export, robotics, and then as a big beneficiary in the Asian market from the AI investment.
At what point does weakness and accelerated pace of losses in the Japanese yen start hurting the positive narrative around equities?
Sure. Look, I think as a global investor, as an Asia-Pac investor, you always have to hedge the currency. Unfortunately, the view for the currency is, a little bit difficult because for the Japanese yen, simply because, one is the economy is doing a little bit softer because of the oil shortage, and two is that even though we have all the export that's doing well, but the government is a little bit more stimulatory. So, there will be weakness in the currency, and it is something that we always have to watch out for. But I think the economy itself, the strength of the economy, will remain to be the key discussion point.
And it's also about the economy in the U.S., right? Realistically speaking, how can you get a stronger Japanese yen when you have lower treasury yields and you continue to get strong U.S. data?
Look, I think the U.S. data at the moment is showing reasonably strong, but I like to, emphasize that if we look at the U.S. market performance, it's very narrow into pretty much the technology as well as energy and, a few other commodity-related sectors or utilities. So if you look into the broader economy, yes, they're still holding up well. The consumer-facing sector, discretionary, others, they are actually now starting to see a bit of weakness, and we heard from companies more recently, even though things hasn't collapsed, but it's getting harder. And there's been a lot of price increases coming through and putting more pressure on those cyclical sectors. So we do think the economies will slow. And the question is, how quickly does it slow?
Jun Bei, when it comes to the Bank of Japan, of course, it's been the outlier trying to normalize and hike rates, despite the fact that we have seen, we were expecting these hikes to come faster. What can we expect in June, and will it make a difference when it comes to how investors perceive Japanese assets?
Yeah, look, I think the expectation is a hold still. Look, I think there is a number of market commentators expecting a hike. Look, we do think that the perception of the Japanese market is always a really good diversification from the Asia-Pac or global investors' portfolio from China. Right now, China is actually doing better than expected, and Japan at this point is still doing reasonably well. Now, rate hike, you have to hedge the currency, but the economy itself, as I mentioned, not only the export growth is doing strong, it's actually the corporate reform as well. That is once in a many decades opportunities for some of those corporates. So I think it still sits very well in a global portfolio.
Jun Bei, you mentioned perhaps still the positive sides when it comes to Japanese equities compared to, say, other markets like South Korea, like Taiwan. The gains have lagged, especially because of the composition of the Nikkei and the topics, right? Will that be a hurdle when they need to compete with regional peers?
Yeah, look, absolutely. When you look at the regional, I think also that we need to throw in China as well, because China is a big component of it, and it's underperformed for so long, last few years, and right now having a bit of rebound. We do think that once China becomes more attractive, it does compete on where else do you put your allocation. I think for any investors, right. Absolutely increasing the allocation to China and Japan.
Jun Bei Liu, always great to get your insights. Thank you so much. She's the co-founder and lead portfolio manager at 10Cap. And coming up, we'll also be speaking to Daiichi Sankyo CEO after the company's annual forecast missed the street. That exclusive conversation coming up. This is Bloomberg. Welcome back. You're watching Insight. Mainland Chinese markets headed to lunch with the CSI 300, seeing a little bit of downside. But this, of course, after we saw some significant gains for those AI themes as we head towards the President's Xi and Trump summit. Do focus on the CSI 300 Information Tech Index. That includes exposure to semiconductors, related services, given, of course, that we have seen that surge when it comes to the Kospi and the TAIEX. Although in today's session, you're seeing right there that the Kospi is under pressure. In fact, shedding billions of dollars of those gains that we've seen in the last 5 sessions or so as investors continue to bet on the AI trade. So with the Kospi a little bit down, we're seeing a little bit of risk-off sentiment spreading across the board. U.S. futures also a little bit down as the APAC MSCI index has also turned negative from gains in the previous session. A little bit more of haven demand, and you have the Bloomberg Dollar Index supported as well. Japan coming back from the lunch break, but we're seeing a little bit of more upside being extended right there. We, of course, are watching the Japanese yen very closely as Secretary Bessent here in Japan meeting with the top leadership. We're also keeping an eye on Daiichi Sankyo after the company's full-year operating income forecast missed estimates. We have seen the stock actually fall almost 20% this year alone. But when it comes to analyst recommendations, we're still seeing 17 buys, 1 hold, and no sells. Joining us exclusively now is Daiichi Sankyo President and CEO Hiroyuki Okuzawa. Now, your company, Okuzawa-san, is the second largest pharmaceutical company in Japan. Tell us a little bit about your latest results and what drove them.
Thank you, Sherry-san, for having me. So we have just announced FY 2025 results. And I'm very happy to report that we achieved the double-digit growth both for top line and bottom line. The revenue exceeded for the first time 2 trillion yen and reaching the 2.1 trillion yen with 13% increase. And also core operating profit is 360 billion yen with 15% increase. I'm happy with that.
Your results came a little bit late, 2 weeks later than expected. You said that you had to adjust to rapidly changing business conditions. Can you tell us a little bit more about what happened and if you're seeing some of the impact of the global disruptions that we're seeing these days?
Well, maybe you are talking about our one-time expense for fiscal 2025. The amount of 75 billion yen as a loss compensation for contract manufacturing organization was posted in 2025. So this happened because of the discrepancy between our minimum quantity commitment to CMO and our actual supply plan for our DXd ADC products. We have just revised our supply plan according to the result of various clinical trial results. And because of that, we needed to pay some compensation, which was recognized as a provision for 2025. That was the reason of the delay.
As I mentioned earlier, your operating income guidance is also way below consensus, about 20% or so. Does that reflect some challenges that you might see this year in the business environment, or is it more of a structural, just being conservative, as Japanese companies tend to be when it comes to guidance?
Well, our fundamental business is continue to be strong. I'm saying that our flagship products, such as ENHERTU and DATROWAY, are both ADC products. These are growing so nicely. For example, ENHERTU, we have a forecast for fiscal 2026. It will be reaching almost 1 trillion yen as an annual sales. And also that way, we expect for this year, reaching the above 100 billion yen. So both products are driving force for our continued growth, not only for this year, but in the coming 5 years.
As you said, in HER2, that's your cancer drug, right? It takes about a quarter of your revenue. Is there a risk that you're very much concentrated on this one flagship drug, or are you trying to diversify from here?
You're right. Not only in HER2 that way, but also we have the third and fourth DXd products. So for these, for the DXd ADC products, we are collaborating with partner companies like AstraZeneca and US Merck. So these products will continuously be the driving force for the coming 5 years. So therefore, we are not a single HER2 company, I would like to say.
We are now seeing also more competition from Chinese biotech companies. Does this factor into the future landscape that you're looking at and the need to diversify?
Yes, we see Chinese companies as strong competitors on one hand. On the other hand, Daiichi Sankyo is a leading ADC company, and we have full confidence in securing this position because we have several DXd ADC product portfolio and also our strong scientists in Shinagawa Research Center already working on the advanced ADC programs and the new modalities. So therefore, I'm very much convinced that Daiichi Sankyo can maintain the leadership position in the ADC space, even if the Chinese companies are emerging.
Yeah, the ADC, antibody drug conjugates that you mentioned, the development of that, how does Daiichi Sankyo differentiate your platform from others?
So we are very much confident in our strong science behind the DXd ADCs. So far, the clinical trial results are proving our strengths of the competitive advantage of our DXd ADCs. And on top of that, our scientist group are working on the new modalities, including advanced ADCs and so on. So therefore, the leading position will be maintained for the coming 5 years and so on. That's our forecast.
You mentioned, of course, the researchers, the talent that you have in Japan. How does artificial intelligence also factor in research and development these days?
Correct. So our scientists are working with AI, and especially we have established the Research Institute in San Diego, United States recently, and they are working on the AI with robotics. So the research work is now automated, and we are going to implement the same system of AI-driven research to our new research building in Shinagawa, which will be on operation next year. We are very much looking forward to seeing the advanced research infrastructure in Tokyo very soon.
We'll be looking forward to that. When it comes to your sales overseas, I think the U.S. takes a chunk of it. Of course, you have business in Europe as well. Do the fluctuations of the yen, how do they impact your business at this point? And what is your sort of base target or base call for how the yen moves this year?
All right. So we have made the new 5-year business plan according to the current exchange rate, like 150 Japanese yen per dollar and 180 Japanese yen per euro. So if the yen will become weaker than this current exchange rate, then our sales of our overseas sales will increase. On the other hand, expenses to be made outside of Japan will be also an increase. So therefore, there would be very much less influence to our bottom line by the end of the day.
Hiroyuki Okuzawa, really good to have you with us, President and CEO at Daiichi Sankyo. And we do have an alert on the Bloomberg. We have just seen the Japanese government now selling 2.6 trillion yen of 2.4% 10-year bonds today at a yield of 2.54%. When it came to the bid to cover ratio, 3.9 versus the 12-month average, which is lower than that. Of course, we have seen the Japanese government having to offer higher yields in order to attract buyers in this environment, especially at a time when we've had some downside on treasuries in the overnight session as well. And we are contending, of course, with fiscal issues domestically as well. Coming up, Titan CFO Ashok Sonthalia will be with us to talk about the outlook for gold in India. This is after Prime Minister Narendra Modi called on citizens to curb gold purchases. That exclusive conversation is in a few minutes. This is Bloom.
Nowadays, there's a trend among the middle class of planning vacations and destination weddings abroad. We must avoid foreign travel for at least 1 year.
India's Prime Minister Narendra Modi there urging residents to avoid the overseas travel. Of course, we continue to see rising oil prices, and now sources saying that those energy costs are forcing India to consider emergency steps to shore up foreign exchange reserves. That could include curbing non-essential imports such as gold. For more, let's bring in our South Asia economy editor Ruchi Bhatia. And Ruchi, there seems to be everything on the table right now to help the economy. What are we hearing?
Oh, absolutely. On Sunday, you heard Prime Minister Narendra Modi urging Indians to cut their usage of fuel and also defer their gold purchases, defer their foreign holidays. And now we do understand that, hectic government meetings have been happening between the Prime Minister's office, the Finance Ministry, and, of course, the RBI, in this to really look at ways to slow the drawdown that we're seeing on foreign exchange reserves. A host of measures are on the table. The most important of them all is what the government is going to do as far as, gold imports are concerned. For now, the officials have said that they will not look at a duty hike. But in the past, we've seen several measures such as the 80-20 rule, where if there was anybody who was getting gold into India, 80% of them that could be used for imports, but 20% had to be exported back. So those kind of rules, or for example, back in the day, we've seen the Gold Import Act as well coming into force. So what will be the measures that the government will be looking at this time around is something that we'll have to wait and watch out for. Having said that, there are other non-essential imports as well. Case in point being consumer electronics imports is something that the government is actively looking at curbing. Besides that, the focus is also on what kind of measures can be taken to restrict the withdrawal of foreign exchange reserves. We're seeing a decline, a concerted decline in India's foreign exchange reserves, and that is exactly what is becoming a pain point thick and fast for the government.
South Asian economy editor Ruchi Bhatia there with the latest being considered in India when it comes to those emergency measures. And in fact, we've seen the market reaction already. One stock that we're watching, Titan, shares have fallen hard on Monday, even after the company reported robust jewelry sales and earnings. This, of course, after, as we mentioned, the Prime Minister called on Indians to cut non-essential gold purchases for a year.
For the country's benefit, we must not buy gold and gold jewelry for at least 1 year, even if we are celebrating something. Our patriotism challenges us to safeguard our Forex reserves, and we must accept it.
Joining us exclusively now is Titan CFO Ashok Sonthalia. Ashok, really good to have you with us. How would you respond, first of all, to the Prime Minister's comments to refrain from buying gold for a year?
Thank you, Sari. Thank you for having me on your show. We also heard it on Sunday night, and we have been kind of trying to assess the impact of this on the either supply side or demand side. We also heard after that government doesn't have a plan to put increase any customs duty on import. So we are waiting for any policy announcement on that. But as far as Titan is concerned, you would be knowing that we have been running exchange programs in India, and particularly have kind of gone ahead quite ahead with that, and almost 50% of our sourcing happens through exchange program. So we believe that we have been doing right things, and we will continue to do right thing. We are in a kind of wait and watch mode at this point of time, because full assessment is too soon to be available.
Can you start thinking of contingency measures and what they could look like if, in fact, the government goes ahead and starts restricting the purchases of gold, or implements something like import tax hikes, for example?
As Sharia was talking about, India has the highest above ground gold with their citizens and temple. Rough estimates suggest about 25,000 tons of gold is there in India. We import 700 ton. So I think if this 25,000, part of it can keep rotating, we actually don't need to import gold the way we are importing. So I'm sure government is looking holistically, not only the short-term measures, but a long-term, which structurally change this imbalance where you have so much gold inside the country, but we continue to import. As far as Titan is concerned, we have right now from the supply side, I would say for next 2, 3, 4 months, we don't see a problem. We can run with that. As far as demand side is concerned, what policy measures government take will decide how do we kind of plan to move ahead. We have, of course, jewelry is one of the largest part of our portfolio, but within jewelry now, international has started growing. We have other part of businesses which are also doing very well. A temporary short-term slowdown might happen if government decides to do something on the purchase side.
I was going to say, how are you looking at sort of changing your revenue mix, especially given that a potential need to hedge if the Iran war continues, if the oil shock continues, and we continue to see also gold prices reaching record highs?
We have been working on various things, and as I talked about, first of all, how do we make our jewelry more accessible? So from 22 carat, bringing it to 18 carat for gold jewelry and 14 carat for diamond jewelry, and those are finding a lot of acceptance because of the high gold prices. The exchange program also kind of take gold price from the buying decision, because you are bringing back your old gold and kind of converting into the new modern jewelry. So that's also working very fine. We have some of these schemes which we launched maybe in last 1 year, where the citizens can save, through the grammage scheme, where they kind of lock the gold rate, and it is in a way SIP in the gold rate, and after 10 months they can redeem that, and they have some sweetener from our side on jewelry purchase. So that program has been doing extremely well. So some of these things are making, irrespective of what the current development from the Prime Minister announcement has happened, but these things have been working well for us, and we saw buyer growth coming back in Q4.
If the dislocations continue, do you expect any changes when it comes to consumer trends, how Indians use gold in their daily lives, whether it's for savings or for special events?
You see, gold is very, very deep-rooted in India, culturally, ritually, the festives, occasions, weddings. Weddings account for more than 50% of gold purchase in India. So things can be sometimes delayed and deferred, but demand doesn't get destroyed in India for sure. And gold as a adornment, as well as a very huge investment angle has got in India, which differentiates India from the other markets. And I don't think that thing is going to change. We have seen across generations, every time it was told the next generation perhaps would not love. The form factor design changes, but the love for gold doesn't change.
Titan, you mentioned earlier also that you were trying to diversify more into international sales, and I think one of your target markets has been the GCC as well. But given, of course, the disruptions in the Middle East right now, what are your plans for the market at a time when you were pretty ambitious of opening new stores there?
Yeah, so of course, the last March and April month have been difficult in terms of, executing some of those plans, but medium to long-term excitement and outlook remains very positive for us. As far as North America is concerned, where US, we are already present and it's doing extremely well. We think we will be opening Canada very soon. So some of those international plans, including Singapore, is working well. GCC, yes, right now is under stress. We hope as soon as the situation settles down there, we will kind of, again, get going with our plan of retail expansion, some of the conversion between Damas and Tanishq. All those things are being discussed, planned. Some of the things have already been executed. Some of these things have slowed down because of the current situation.
Slow down or rolling back some of those ambitions of, what was it, more than 24 new stores across the GCC?
No, Sari, we are not rolling back at this stage. We still remain pretty positive for the region. It is just a matter of current situation settling down and peace getting restored in the region.
Ashok, how about the rupee and the record weakness that we're seeing against the US dollar? How is that factoring into your business?
So fortunately for us, in last few years, our exports have grown much more significantly than imports, what we do. And actually, systematically, our imports have been coming down. So rupee dollar actually situation, if at all impact us, our PNL, it is more favorable than unfavorable.
We have also seen some issues around banks unable to import gold. Has that sort of had an impact on your inventory levels at all?
Not yet. We also had some situation in India. We also heard that got sorted out and actually clearance started maybe 10 days back, whatever gold was stuck in various points. But again, now this announcement has come in. So we will wait and watch to see what policy announcement happen around this and accordingly plan. As I was telling you, for next 2-3 months, we have enough inventory to kind of keep producing, manufacturing and supplying to markets.
Ashok Sonthalia, really good to hear from you. Thank you very much. He's the CFO at Titan. And of course, we have plenty more to come on Inside, especially tomorrow's show. Anastasia Amoroso of the Partners Group will be with us to talk markets. Also, Michael Petty, Senior Fellow at Carnegie Endowment for International Peace, joins us to discuss the Trump-Xi meeting. Later today, JP Morgan will be holding its annual Global Markets Conference in Paris as well. TV Go is your function for that. That's it for Insight. Horizons Middle East and Africa is up next. Keep it here with us. This is Bloomberg.